from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Chinese tech giants soar as investors try to get in at the bottom amidst regulatory scrutiny from both Beijing and Washington. This as the SEC doubles down on disclosures for Chinese companies publicly trading in the U.S. What SEC Chair Gary Gensler told Bloomberg about the future of foreign tech IPOs. Plus, part of that boost for China tech stocks coming from Cathie Wood, ARK, buying into JD.com. We will hear from Wood herself about her China strategy and more later this hour. And Facebook looking to seize the day with its blockchain technology, Diem, formerly known as Libra. We will bring you a conversation with Facebook's David Marcus about where the cryptocurrency project stands. All that in a moment, but first, equities rising to record highs today. Let's get a look at the markets with Bloomberg's Kriti Gupta. Kriti, take it away.
Well, Emily, green on the screen for the equity market, just like you said. Now, on the surface, it looks like big tech outperformed because you see these whopping huge gains for the New York FANG index. They hold those big tech stocks. But really, the secret sauce for today, for that index in particular, was those Chinese tech stocks. You mentioned it in your intro here. You're starting to see a little bit of that buy the dip mentality when a lot of those U.S.-listed Chinese companies have dropped from their peak by 52%, Emily. That seems to be the margin, and of course technical factors that brought in some of those buyers into those levels. So let me show you a terminal chart of what those ETF flows look like, because it really was ETFs that seemed to carry those stocks. You can see those flows going in through the record index here, or record flows, I should say, to the KWEB ETF here, really that Chinese internet stocks, people buying into the likes of Alibaba, Baidu, JD.com, but through an ETF, essentially a package deal. But it wasn't just those Chinese stocks that did well, because you did have some of that big tech names on the side of its rally as well, but not all of them, Emily. Alphabet, Facebook, the ones that are more geared towards that cyclical recovery, the economic recovery, the business cycle, essentially, those led the S&P 500, the biggest contributors to that gain. But the biggest decliners, Apple, Microsoft, those hard tech names, that defensive story really underperformed. Cyclicals out in front, and of course, we can still apply that to the tech story, Emily.
All right, Kriti, thanks so much for the roundup. Meantime, the SEC will demand that more than 250 Chinese companies trading in the U.S. better inform investors about political and regulatory risks, expanding a dictate that it recently imposed for firms seeking IPOs here. Bloomberg's Ben Bain spoke with SEC Chair Gary Gensler. Ben's with us now. So you've been speaking to Chair Gensler for a while now, Ben. How does what he's telling you now, Ben, hang on. We're going to get straight to President Biden, who's just come out to speak.
The leaders of the G7 earlier today, I want to say a word about the progress we're making on the Build Back Better agenda here at home. I just got off the telephone with the leaders in the House. Today, the House of Representatives has taken a significant step toward making a historic investment that's going to transform America, cut taxes for working families, and position the American economy for long-term growth. When I became president, it was clear that we had to confront an immediate economic crisis, the most significant recession we've had since the Depression, or at least since Johnson. But that wasn't going to be enough. We also had to make some long-term investments in Americans and America itself. The first thing we did was to write and pass the American Rescue Plan, and it's working. Our economy has added 4 million jobs in my first 6 months in office. Economic growth is up to the fastest it's been, the fastest rate in 40 years, and unemployment is coming down. Right now, our economic growth is leading the world's advanced economies. But to win the future, we need to take the next step. Today, the House of Representatives did just that. Today's vote in the House allowed them to consider my Build Back Better agenda, a broad framework to make housing more affordable, bring down the cost of prescription drugs by giving Medicare the power to negotiate lower prices for drugs, make elder care more affordable, provide 2 years of free universal high-quality pre-K and 2 years of free community college, provide clean energy tax credits, continue to give the middle-class families the well-deserved tax cut for daycare and health care that they deserve, allowing a lot of women to get back to work primarily, and provide significant monthly tax cuts for working families with children through the child care tax credit. These investments are going to lower out-of-pocket expenses for families and not just give them a little more breathing room. In addition, we're going to make long overdue, much-needed investments in basic, hard infrastructure of this nation. This is an area where we have broad bipartisan agreement to invest in our antiquated roads, highways, bridges, transit, drinking water systems, broadband, clean energy, environmental cleanup, and making our infrastructure more resilient to the climate crisis, and so much more. And this is all paid for. Instead of giving every break in the world to corporations and CEOs, by the way, 55 of our largest companies in America paid $0 in federal taxes on more than $40 billion in profit last year. We can ask corporations and the very wealthy just to pay their fair share. They can still be very wealthy, they can still make a lot of money, but just begin to pay their fair share. So we can invest in making our country stronger and more competitive, create jobs and raise wages, and lift up the standard of living for everyone. The bottom line is, in my view, we're a step closer to truly investing in the American people, positioning our economy for long-term growth, and building an America that outcompetes the rest of the world. My goal is to build an economy from the bottom up and the middle out, not just the top down. And that's what we're on our way of doing. Look, I want to thank Speaker Pelosi, who was masterful in her leadership on this, and Leader Hoyer and Whip Clyburn and Chairman DeFazio, the entire House leadership team, for the hard work, dedication, and determination to bring people together so we can make a difference in people's lives. I also want to thank every Democrat in the House who worked so hard over the past few weeks to reach an agreement and who supported the process for House consideration of the Jobs and Infrastructure Plan, the Build Back Better effort. There were differences, strong points of view. They're always welcome. What is important is that we came together to advance our agenda. I think everyone who did that, I think everyone who did it was there. Look, I also want to thank everyone who voted to support the John Lewis Voting Rights Act. You know, advancing, it's an act to restore and expand voting protections, to prevent voter suppression, and to secure the most sacred of American rights, the right to vote freely, the right to vote fairly, and the right to have your vote counted. The House is active. The Senate also has to join them to send this important bill to my desk. And the Senate has to move forward on the People's Act, critical legislation to protect our democracy and the right to vote. We need both of those election bills. But let me now turn to Afghanistan. I've met this morning with my counterparts in the G7, as well as heads of the United Nations, NATO, and the European Union. I express my thanks for the solidarity we have seen as we've stood up an unprecedented global effort. I updated our partners on the significant progress we made in the past 10 days. As of this afternoon, we've helped evacuate 70,700 people just since August the 14th, 75,900 people since the end of July. Just in the past 12 hours, another 19 U.S. military flights, 18 C-17s and 1 C-130 carrying approximately 6,400 evacuees, and 31 coalition flights carrying 5,600 people have left Kabul just in the last 12 hours. A total of 50 more flights, 12,000 more people since I updated you this morning. These numbers are a testament to the efforts of our brave service women and men, to our diplomats on the ground in Kabul, and to our allies still standing with us. And we had a productive discussion. There was strong agreement among the leaders about the evacuation mission underway, as well as the need to coordinate our approach to Afghanistan as we move forward. First, on evacuation, we agreed that we will continue to our close cooperation to get people out as efficiently and safely as possible. We are currently on a pace to finish by August the 31st. The sooner we can finish, the better. Each day of operations brings added risk to our troops. But the completion by August 31st depends upon the Taliban continuing to cooperate and allow access to the airport for those who we're transporting out and no disruptions to our operations. In addition, I've asked the Pentagon and the State Department for contingency plans to adjust the timetable should that become necessary. I'm determined to ensure that we complete our mission, this mission. I'm also mindful of the increasing risks that I've been briefed on and the need to factor those risks in. They're real and significant challenges that we also have to take into consideration. The longer we stay, starting with the acute and growing risk of an attack by a terrorist group known as ISIS-K, an ISIS affiliate in Afghanistan, which is a sworn enemy of the Taliban as well. Every day we're on the ground is another day we know that ISIS-K is seeking to target the airport and attack both U.S. and allied forces and innocent civilians. Additionally, thus far, the Taliban have been taking steps to work with us so we can get our people out. But it's a tenuous situation. We've already had some gunfighting break out. We run a serious risk of it breaking down as time goes on. Second, the G7 leaders and the leaders of the EU, NATO, and the UN all agreed that we will stand united in our approach to the Taliban. We agreed the legitimacy of any future government depends on the approach it now takes to uphold international obligations, including to prevent Afghanistan from being used as a base for terrorism. And we agreed that none of us are going to take the Taliban's word for it. We'll judge them by their actions, and we'll stay in close coordination on any steps that we take moving forward in response to the Taliban's behavior. At the same time, we renewed our humanitarian commitment to the Afghan people and supported a proposal by the Secretary General Guterres of the United Nations-led international response with unfettered humanitarian access in Afghanistan. Third, we talked about our mutual obligation to support refugees and evacuees currently fleeing Afghanistan. The United States will be a leader in these efforts, and will look to the international community and to our partners to do the same. We're already seeing our allies' commitment. They're bringing to their countries the Afghans who served alongside their forces as translators or in their embassies, just as we're bringing to the United States those Afghans who worked alongside our forces and diplomats. We're continuing that effort. We're conducting thorough security screening in the intermediate stops they're making for anyone who is not a U.S. citizen or a lawful permanent resident of the United States. Anyone arriving in the United States will have undergone a background check. And we must all work together to resettle thousands of Afghans who ultimately qualify for refugee status. The United States will do our part, and we are already working closely with refugee organizations to rebuild a system that was purposely destroyed by my predecessor. Finally, we agreed to stay vigilant against terrorist threats that have metastasized around the world. We went to Afghanistan with our allies in 2001 for clear reasons. One, to get the people who attacked us on 9/11 and to get Osama bin Laden, and to make sure that Afghanistan was not used again as a base from which to attack the United States or our allies. We achieved that objective. We delivered justice to bin Laden more than a decade ago. But the current environment looks very different than it did in 2001, and we have to meet the challenges we face today. We run effective counterterrorism operations around the world, where we know terrorism is more of a threat than it is today in Afghanistan, without any permanent military presence on the ground. And we can and will do the same thing in Afghanistan with our over-the-horizon counterterrorism capability. Cooperation with our closest partners on our enduring counterterrorism mission will continue to be an essential piece of our strategy. In short, we all of us agreed today that we're going to stand shoulder to shoulder with our closest partners to meet the current challenges we face in Afghanistan, just as we have for the past 20 years. We're acting in consultation and cooperation with our closest friends and fellow democracies. And I want to again thank all of our allies and partners around the world who have rallied in support of our shared mission. We ended the conversation today by a clear statement on all of our parts. We are going to stay united, locked at the hip in terms of what we have to do. We'll get that done. And tomorrow, I've asked Secretary Blinken to give you an update and a detailed report on exactly how many Americans are still in Afghanistan, how many have gone out, and what our projection is. So thank you again, and God bless you, and may God protect our diplomats and all those in harm's way. Thank you.
President Biden there reiterating that he will be sticking to the deadline the U.S. has set to leave the Kabul airport for now, but also underscoring the number of Americans, tens of thousands of them, the U.S. has helped evacuate from Afghanistan since August 14th and also since the end of July. But he reiterated that it's a tenuous situation. Each day brings added risk, and that what the U.S. does will depend on how the Taliban acts, not the Taliban's word. I want to bring our Ben Bain back in, who's been standing by listening into this from Washington. So obviously, Ben, the U.S. has been under pressure from U.S. allies, from Britain and France specifically, to extend this deadline. But he made a point to emphasize the united front of all the allies. What do you make of what the president said and how he said it?
Yeah, I mean, he certainly went out there to emphasize that he had had this call with these world leaders today, and everyone was on the same page. He went through tick by tick, talking about standing united against terrorism, essentially working together, as you mentioned, about continuing the evacuation, resettling Afghan refugees. But I thought it was interesting also that he mentioned that he had asked the DOD and the State Department to also look at contingency plans should that August 31st deadline need to slide. Obviously, there's a lot of attention being placed on that date just coming up here next week. For right now, he says, and the administration has continued to say that they're on pace to meet that. But certainly, we're getting wind now from the president's own mouth that there are plans, should that need to slide. And I think, obviously, as we look into next week, everyone's going to be focused on August 31st to see if the U.S. and its allies can hit that deadline.
Absolutely. The president saying there is, quote, serious risk of the evacuation process, the plan itself, breaking down as each day goes on. And of course, they've certainly been briefed by intelligence that has been showing that the risk of a terror attack is increasing. So, what do you think that Biden's team, considering all of these factors, how are they weighing all of these different possible scenarios, given that the U.S. is key to getting not just Americans out, but of course, Afghans who have helped the U.S. military effort, but basically folks from almost any other country?
Yeah, and what the president, just said, and what we heard is the U.S. seems to be focused on the idea of an ISIS affiliate, and this is not the first time that President Biden has spoken about the idea that Al-Qaeda and ISIS are enemies. And what he seems to be saying here is that the longer the United States remains there in Kabul and continuing this evacuation, the more that forces trying to remove people and people trying to get out, frankly, continue to be targets. So I think what we heard from the president was essentially that he sees the need to get this done by August 31st. As we've continued to hear from the White House, they're pushing ahead. They plan to get it done. But what we did hear today is that there are some contingency plans about potentially needing to extend past that, and the administration is working out what that could look like.
All right, Bloomberg's Ben Bain for us in Washington. Clearly an evolving and very difficult and dangerous situation. Thanks so much for your insights there. I do want to stick with this. We're going to continue the conversation after this quick break. More of Bloomberg Technology when we return. This is Bloomberg. All right, right, in other news, Chinese tech stocks soaring as investors are trying to get in at the bottom amidst regulatory scrutiny from both Beijing and Washington. The SEC has been doubling down on disclosures for Chinese companies publicly trading in the U.S. I want to bring in Xiaomeng Lu, Eurasia Group Director. And Xiaomeng, we just said goodbye to Ben Bain, who spoke with Gary Gensler today about the additional scrutiny that the U.S. and U.S. regulators are placing on these Chinese tech publicly traded companies in the United States. Curious what you're reading into these signals from both the U.S. At the same time, we're seeing this crackdown on Chinese companies from Beijing itself. How do you expect this to play out?
That's a great question, Emily. Right now, SEC is pushing to implement the new VIE and regulatory risk disclosure requirement. And Chinese regulators have signaled multiple times as recent as yesterday that they're interested in cooperating. So I think this additional new disclosure requirement is not a major hurdle, but I do see longer term concern in terms of the challenge of US listed Chinese company to comply with the Holding Foreign Company Accountable Act in the US. I think that's a major problem. Right now, we don't see really the two sides can resolve their long running audit dispute. So in 3 years, it's likely that many Chinese companies listed in the US will face delisting pressure.
Meantime, China has also paused dozens of domestic IPOs. Who do you think is the loser in this equation? Is it the up-and-coming Chinese tech companies, tech unicorns, tech startups?
I think those companies are very much between a rock and a hard place right now. They have been growing at very fast pace, and they look to provide reward here to their investors. So in the same boat are also the private equity venture capitalists who have been working with them closely for the past few years and look for opportunity to cash out their investment. They are very much in a poor position at the moment.
So what does this mean for investors? For example, a venture capitalist like Sequoia, which has a huge US business, but also a huge China business. What does this mean in terms of the choices that investors are making?
Yeah, it has been a huge blow to those PE and VCs who are very invested in Chinese platform unicorns in the past few years. Pretty recently, the chairman of SoftBank, who is one of the most aggressive players in the space, saying they are going to put a pause, at least 1, maybe 2 year pause into investing in new ventures. I think other players in the space, their American counterparts are probably even more conservative and putting a deeper thinking into their opportunity selection process going forward.
Meantime, you have the Chinese government taking a stake in ByteDance and even a board seat at ByteDance, the company that, of course, owns TikTok, which is a pretty unusual step for the Chinese government to take it that far. What do you make of that?
Technically, the practice of Chinese government affiliate entity getting a stake in Chinese platform company is not exactly brand new. This happened in the past, but the government took this drastic action at this politically sensitive moment when the company just survived a U.S. ban and a divestiture executive order last year, and is still in regulatory dialogue with the U.S. CFIUS regulatory screening board for foreign investment. I think this action will definitely complicate the U.S. regulatory pressure and regulatory process, and also trigger more political pressure for the U.S. regulatory body to scrutinize Chinese tech companies on national security ground.
All right, Xiaomeng Lu, Eurasia Group Director, so much to continue to follow here. Appreciate you sharing your thoughts with us. Okay, coming up, could the social network be getting into NFTs? We're going to find out after the break when we hear from Facebook's David Marcus, who's heading the company's digital wallet division, Novi. After the break, we'll hear from the head of that division again, David Marcus. This is Bloomberg. back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the markets. I want to hone in on crypto. Now, Bitcoin's rebound continuing with the cryptocurrency barely touching that $50,000 level. Our Kriti Gupta has more. So there seemed to be more momentum yesterday, Kriti, than today. How did it play out?
Absolutely, Emily. Almost there, almost coming back, clawing back those gains that they lost in the past couple of months. Today, underperforming just a little bit, but don't worry, it's not necessarily just a crypto story. You saw gold lower on the day, the dollar lower on the day. For those people that believe Bitcoin, Ethereum, and crypto is the next gold and the dollar, they actually performed pretty in line with the macro picture today. So like I said, crypto down across the board, but I want to talk about the spillover effects, because crypto directly isn't just the only way you can invest and get that exposure. You can do it through the stocks that track them as well. The difference, though, Emily, is although those used to move in tandem pretty quickly, they have diverged. With the stocks in particular, the likes of Marathon, Riot, a lot of the companies that have used Bitcoin or crypto, for example, have started accepting payment. Those stocks have actually lagged the actual cryptocurrencies themselves, making them a little less of a method to getting that Bitcoin exposure. Today, though, a little bit of a different story. We talked about cryptos down broadly today. Crypto stocks, on the other hand, outperforming in line with the broader market. Emily, the question is, does that divergence stay? We'll have to keep an eye on that.
All right, Kriti, thanks so much for the roundup. Meantime, we got an update today from Facebook on the state of the social network's digital payments products. Our Kurt Wagner spoke with David Marcus, who heads the division that's building the digital wallet called Novi. Take a listen.
So it's definitely ready now, and we've been working on it for a couple of years now, and you know, it takes time because it's not just an app, right? So when you have to start the journey to serve as many people as possible who are left behind by the current system, you have to make sure that all of your compliance systems are in place, that customer service is set up in such a way that you can help people if they encounter issues. And you know, we want to make sure that we can earn people's trust over a long period of time. And as a result, it took a tremendous amount of effort to get operationally ready on top of building what I believe is a really good wallet app that will enable people to send money to one another in a really seamless way.
You know, you mentioned that trust, and there are a lot of people out there who are distrustful of Facebook, right? They for whatever reason, they don't want Facebook involved with their money. And you wrote a blog post last week. You said you thought that was un-American, that kind of Facebook is getting this rap. What did you mean by that? Can you elaborate a little bit on why you think Facebook kind of deserves people's trust when it comes to a digital wallet like this?
Look, I don't think we deserve people's trust. I think we deserve a shot at earning people's trust, right? And I think that we are well set up to do that. And I think that, you know, we've proven in the past that we can reduce costs in a very significant way with other critical parts of our daily lives, like communications. Like, you know, if you look at how much an international call used to cost and how much text messages used to cost before WhatsApp and Messenger, you know, it was much more expensive, and we helped reduce cost and broaden access to people who couldn't afford it before. And so I think that we've done this in the past. We have a track record for that, and I completely understand the scrutiny, and I completely understand the trust conversations. But I'm not advocating for blind trust. I'm advocating for a shot to earn people's trust over a long period of time, and I think we're prepared to do that.
Let's talk metaverse for just a second, because this is something your boss, CEO Mark Zuckerberg, is talking about a lot these days, this idea that we'll all kind of be interacting in a virtual world sometime soon. How do you think Novi will fit into that, and Diem as well? Are these kind of going to be the way that people exchange value in the metaverse someday, or is it too soon to kind of put a stake in the ground there?
Well, I think, you know, thinking about the metaverse as a fully digital environment is actually super helpful when you design products that need to be future-proof. And, you know, when I look at what's going to be needed in the metaverse is basically, you know, really seamless movement of value. And for that, we need a new infrastructure. interoperability, because you'll want to have multiple wallets able to participate in the metaverse, and sending value from one wallet to another can't be impossible, which is a current limitation of the current payment rails. And then you have all kinds of other things that are really important to think about when you think about the metaverse, and not only related to payments. You can think about smart contracts. And you can think about all kinds of new models for creators to generate revenues by creating digital assets, NFTs, and by creating new models around that. And I think having programmable money and having smart contracts on top of a purpose-built blockchain is going to be transformational for the metaverse. Because if you're a creator, you're creating an NFT, you may want to rent your NFT or sell your NFT. You'll have to store your NFT, and you can think of all kinds of new business models around this that are not possible with the current payments infrastructure and without smart contracts. So I think it's super interesting to start thinking about these things now, so we can build the right infrastructure and think about how to design these products the right way so that they're future-proof.
You mentioned NFTs a few times. I'm curious just what Facebook is thinking about NFTs. Is this something that you're considering for creators that use Facebook or Instagram? What is kind of Facebook's feeling right now about NFTs as a product for consumers?
Well, it's too early to talk about our plans, but we're definitely looking at a number of ways to get involved in the space, because we think we're in a really good position to do so. And when you have a good crypto wallet like Novi will be, you also have to think about how to help consumers support NFTs. And so while there's no immediate plans that I can talk about, we're definitely thinking about this. I mean, it's really an area that is worth exploring, and one where we can have a positive impact for both creators and consumers on the other side.
David Marcus there, head of Facebook's digital wallet project. Novi, former head of Libra. Meantime, a who's who list of tech CEOs will head to the White House Wednesday to address concerns over a recent and very dramatic uptick in ransomware and online attacks. Apple's Tim Cook, Microsoft's Satya Nadella, Amazon's Andy Jassy expected to meet with President Biden to talk about efforts by private companies to improve cybersecurity. Also invited, representatives from the banking, water utility, and energy sectors, all victims of recent cyber attacks. Remember Colonial Pipeline back in May? Joining us now to talk about the state of cybersecurity, among other issues, former COO of VMware and former president of SAP, Sanjay Poonen. Sanjay, thank you so much for joining us. So this is the first big meeting we're seeing between big tech CEOs and President Biden. What do you imagine will be discussed at this summit, and what do you think the outcome is going to be?
Well, Emily, thanks for having me. I think the last time we talked was before the pandemic. I can assure you any summit is going to be more interesting than the last MyPillow summit on security. But jokes aside, I think this is serious. It's really good to see the Biden administration and their appointees like Jen Easterly, who's the director of cybersecurity and infrastructure, and people who are advising her, Ted Schlein here in the Silicon Valley. I met her before while she was going through her confirmation. She's execution-oriented, she's smart, and she's really trying to build a partnership with the private sector, many of the CEOs and others. And this, if you look at the spate of these attacks, we have to take this seriously, just like terrorism. I mean, right now it's just economic money, but when you talk about operational systems, there could be lives impacted in the future.
That's a pretty dramatic statement there, that this is just like terror. I mean, what do you think these CEOs need to convey to the administration when clearly there are other priorities at the moment, like evacuating tens of thousands of people from Afghanistan?
Well, that obviously is very important. That is more important than anything else because of all that's going on. Hopefully we'll get through that, the Afghanistan part, in the next couple of days and weeks. But cybersecurity, I mean, in the 1980s, there was an incident in India where I grew up. Union Carbide had a spill in Bhopal where thousands of people died. And, quite frankly, if this were to hit a nuclear plant or someplace else where there's chemical effects, this will be live. And we have to take these nation-state actors seriously. And the question really to me is, how are we going to respond when it's Russia or China or Iran, North Korea? we have to develop a retaliatory response and be bold about how we do this. We also have to make sure that there's ways by which there isn't victim shaming. There isn't ways by which there's a safe harbor for companies to be able to come forward, work with the FBI and CIA. And this is the one thing that I also want to see happen, where when ransomware happens, today there's insurance that covers the payment of those things. I really want to see companies refuse to pay and the FBI, CIA go after these folks and recover that money. And this requires all of these big tech giants. There's a few others I would have named, also Palo Alto, CrowdStrike, that are good security companies coming together in a coalition. And there's several steps that they can tangibly take.
Meantime, obviously, we're seeing work shifting dramatically as well, and more work going remote, more data going to the cloud, more companies relying on the cloud, hence this threat of cyber attacks getting bigger and bigger. Where do you see this shift in work and productivity going? How do you see this as an inflection point for potentially how we work for decades to come?
Well, I think, listen, there's an inevitable move to the cloud. If you look at the three big cloud players that announced last month, Amazon, Azure, Google, collectively, they represent about $100 billion of revenue run rate, growing 37%. So increasingly, I do believe that security, when moved to the cloud, is better than a lot of other smaller companies who may not have the technology wherewithal to be able to do security. And the government clearly has been a leader. When you think about FedRAMP and some of the federal processes that allow the government to have a secure cloud. JEDI was one example of that. They're investing in FedRAMP, moderate, high impact levels, secret, top secret. So my belief is that increasingly the cloud will be a secure place, whether it's in this government or other governments. The other aspect is hybrid work. Last year during the pandemic, I set myself a goal to try and talk to 1,000 chief security officers because I figured I could schedule 30 minutes with them. I didn't get quite 1,000. I did 700, 800, but I can assure you that would have been impossible in a physical world where I was traveling to various different countries. Zoom made this incredibly easy and possible. So I think hybrid work is here to stay. There will be some combination of, work and visit in person, but I do think that our productivity is enormous. And with that comes a whole new state. And the way to think about this is zero trust. You cannot trust anything. And the whole security industry is moving to this notion of zero trust, which I think is the wave of the future.
All right, Sanjay Poonen, former longtime tech executive at SAP, VMware, and more. Sanjay, great to have you weighing in on all of this with us today. Thanks. Coming up, Ginkgo Bioworks reports a big jump in first half revenue. We're going to talk to the company's CEO, Jason Kelly, as the pandemic drags on and their work in it continues. That's next. This is Bloomberg.
The way that Shopify views the future retail is retail everywhere. We don't think the retail in the future will be done just online or just offline. It's all going to be about consumer choice.
Harley Finkelstein there, Shopify president, talking about the future of e-commerce. Shopify and TikTok expanding their partnership, giving consumers the ability to shop directly in the TikTok app for the first time. Shopify has existing shopping partnerships with other social platforms like Facebook, Instagram, and Pinterest. Meantime, with school resuming across the country and the pandemic dragging on, Ginkgo Bioworks has partnered with various states on COVID testing. The company recently reported revenue of $88 million for the first half of the year, up 180% year on year due to big growth in its foundry business, which is key to helping the company seek new drugs, therapies, especially with respect to COVID. Joining us now, Jason Kelly, the CEO of Ginkgo Bioworks. So, Jason, I'd love for you to give us a quick explainer on how COVID has really changed and perhaps accelerated your business, given the numbers that we're seeing.
Yeah, so our activities in COVID are really in the area of biosecurity. So basically keeping things like workplaces and schools open. So just in the last 3 or 4 months, we've signed over $400 million of contracts for K-12 testing with states. So California, Pennsylvania, Arizona, Maryland, we're doing statewide testing in those areas. Basically, once a week, universal testing of every kid so that your kid doesn't end up in quarantine, schools don't have to close, you only send home a student, not a whole classroom or a school.
As a parent with kids in school, I know this testing is happening and COVID is out there. Like, it feels very close to home. What are you seeing in the testing trends? What kind of numbers are you getting when it comes to positive cases? And how does that impact how you think this is going to play out for schools this year?
Yeah, I have a 6-year-old and a 9-year-old. It's top of mind. I think the big difference everyone needs to realize is the Delta variant's about twice as infectious as what we were dealing with last year. So places that open, and had my kid's school was open, and a lot of schools in the South were open. What you did last year won't necessarily work, and so you're starting to see that. You're seeing districts shutting down in Florida, districts shutting down in places like Georgia that opened early. I think we should expect that. I think the answer is to put on masks. And then also to be doing this weekly testing so that when you have these inevitable cases, it's less disruptive and the schools stay open. And we do see the schools that are doing it. Ultimately, if they can contain it, if they can take the kids out of circulation before it spreads, they can keep case numbers low. That's the answer. And if you don't do it, you should plan on having your kids in quarantine a lot, which has been very frustrating for those states that opened early.
We're learning new things about the potential and also the limitations of mRNA vaccine technology. Do you think we're going to keep needing shots to live with COVID, adults and children?
Yeah, I think we will see regular boosters, kind of like you see with flu. And Ginkgo, we just announced a partnership with Aldevron, which is one of the big vaccine manufacturers, that we had completed a 1-year program that tenfold increased the efficiency of their production of what's called vaccinia capping enzyme, one of the key supply chain ingredients in vaccines. And so this is a big part of our growth coming up is taking a royalty with our sort of app store style business model at Ginkgo, where we get a royalty on the engineered cell applications that come off the platform. And so that's a big one for us coming up in supply chain for BC.
So give us an update then on how you're progressing in human drug development, what we should be watching for.
Yeah, so we announced a partnership with Biogen earlier this year in the area of gene therapy. I think the big thing is, if you think of what Ginkgo's built on, it's the idea that DNA is code that you can read and write, so you can program cells, and that's what's happening with these mRNA vaccines and with gene therapies. It's sort of code as drug, right? And so I think you should expect to see a lot more of that, given the success of mRNA vaccines, and we expect to be right in the middle of that. By operating as a horizontal platform. It's sort of like, we develop apps. It's kind of like the opposite of the metaverse. They're all in the real world, and some of the biggest ones coming up are going to be in therapeutics.
So another synthetic biology company, Zymergen, took a pretty big fall a few weeks ago, and I'm curious how your model is different from theirs, what you're learning from what they're going through.
Yeah, so this is the big distinction is the way Ginkgo operates is very much taking a page out of the tech company playbook. So think like an Amazon Web Services or an Apple App Store, horizontal across all markets. And then when an application gets developed, like say that supply chain ingredient that Aldevron's selling in vaccines, we develop the app and then the customer brings it to market and we get a royalty on it, right? So it's very similar to like a rev share that like an Apple would take on the App Store. That allows us, we ended last year with more than 50 cell programs like that. We just updated our projections for this year from 23 to 30 new programs. So we'll end this year with 80 active programs. That portfolio risk means we're not dependent on any given app's success, just like Apple's not dependent on the success of any single app in the App Store. That's very different than Zymergen, where they had, a particular product they were betting on in the foldable screen space.
All right, Jason Kelly, always good to have you here and appreciate the updates as the pandemic and your work in it rapidly evolves. CEO of Ginkgo Bioworks there. All right, coming up, Apple reversing course on a planned revamp of its iPhone browser. Details on that and a whole lot more with Mark Gurman next. And don't forget, we've got a lot more tech results this week. Salesforce out with its quarterly report Wednesday. Thursday, we're going to hear from HP Inc., Dell, and Peloton. And of course, we'll bring you all the details and analysis you need to know. This is Bloomberg.
I'm Mark Gurman with Bloomberg Technology, and on this week's episode of Power On, I'll be taking a look at Apple reversing changes to the iPhone's web browser and how COVID-19 continues to rock the company. In June, Apple announced big changes to Safari on the iPhone. As the device's built-in web browser, Safari is clearly one of Apple's most important apps. The biggest change? moving the address bar from the top of the display to the bottom of the screen. The company also unfortunately hid buttons for refreshing web pages as well as sharing them. Overall, it was a clunky and confusing change without a real purpose. An earlier version of Apple may have simply ignored these complaints. After all, this is the same company that waited 4 years before ditching its failed butterfly keyboards, said the iPhone 4 antenna issue was overblown, ignored criticisms of iOS 7, and praised the MacBook Pro Touch Bar despite little usage from professionals. But this time, the company's actually listening to consumers, and that's a great thing. In the latest version of iOS 15, which is scheduled to be released to consumers around September, Apple has reversed the changes, making the new design simply an option in settings. I've already reverted to that classic look personally. In not so good news, Apple's also continuing its annual tradition of delaying some features. This year's victim is SharePlay, a new mechanism for sharing your screen, listening to music, and watching video with a friend over FaceTime. Also likely to be delayed is Universal Control. That's a feature for controlling multiple Macs and iPads using one trackpad and keyboard. Another feature likely to be delayed are new mechanisms for managing your data. In other news, COVID-19 continues to impact the company's operations. Apple has delayed its return to office plan for the third time, this time until January 2022. COVID has also led Apple to increase testing of staff to up to 3 times per week. It's also impacting stores, with Apple needing to close at least 1 location in the US because over 20 staff members were either exposed to or tested positive for COVID-19. With major plans like an iPhone revamp and a mixed reality headset in the cards for next year, Apple, along with all of us, is planning for a much better 2022. I'm Mark Gurman. This is Power On.
Don't forget, you can sign up for Mark's weekly Power On newsletter at Bloomberg.com. All right, Facebook is bringing voice and video calling to its flagship social networking service. It's the latest attempt to fine-tune its communications features after spinning off Messenger into a separate app in 2014. Some users will be able to place voice or video calls from the Facebook app starting Monday. And that does it for this edition of Bloomberg Technology. Make sure to tune in tomorrow. We're going to be joined by Google's Cloud Risk Director, Jeanette Monfra, along with Travis Vander Zanden, CEO of the scooter startup Bird. I'm Emily Chang in San Francisco. This is Bloomberg.